All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. If I told you there was a company out there that had no expected earnings growth next year and no expected revenue growth next year, in fact, both were expected to start declining next year, and then told you that stock would end this year at a new high, what would you say? You'd say, well, that's pretty unusual. Something must be going on. Well, the reality is in this market right here, right now, is that is not that unusual. We have many examples of this happening. And so let's go out and take a look at one of these examples and just talk about some of the recent price action and how to trade it. If you look at this from a more bearish standpoint, and then how to trade it if you're looking at it from a more bullish standpoint. All right. So let's go take a look at this company, and this company is Caterpillar. Okay, Caterpillar make industrial equipment, and if we look here at the earnings, their Q4 earnings here that they'll report in January are expected to grow 24%, but then that's the end of their growth. Next quarter, 0%. Next quarter, minus 4%. Next quarter, minus 5%. Okay, they are not going to be able to keep up with the growth next year, according to their projections, and that is because their revenues are not going to be growing. They have hit an area where they've had some nice growth, some nice double-digit growth, but they are moving into an area of flat to contracting earnings and revenues. Yet, if we go and look at the stock price, we can see that the stock price is trading at a new high, not just here this year, but if we come back and look at it on a weekly basis, we can see that this stock is trading at a new high all time. Okay, trading up here about almost near $300. Okay, so what gives? What's going on? Why would a company that has no projected earnings for next year and no projected revenue growth for next year, why would that company be trading at a new high? Well, it comes down to the dynamic that's in the market right now. And the dynamic that is in the market currently is that the Fed is going to rescue this market from itself. That yes, there's some economic chaos ahead, but the Fed is going to start lowering rates and it is going to create a soft landing economically for the entire world, and these companies are going to be okay. And that is why they have been pushed higher, because this original push higher that happened with many of these companies started here in November. And this was when the Fed took a more dovish tone when it came to rates going into next year. And we saw some short squeeze action. We saw a lot of those that were betting against these industrials and these other companies that had no earnings and no revenue. We saw them get squeezed. We saw the shorts have to pop out. But as we've looked into December and had more Fed action, the longs have been forced to be buyers. Those fund managers that have been underinvested, that have been looking at these stocks and saying, hey, it doesn't make sense to be invested in these from an earnings and revenue standpoint, they've stepped away from them. But they've been forced now to get back in them, because by the end of this year, they cannot show on their books that they don't own stocks that are hitting new highs. And so we've seen a lot of forced buying come into them. Now, just the other day, here on Wednesday, we saw a reversal in many of these stocks. And in fact, let me just change this chart up a little bit. But we saw reversals come in where stocks like Caterpillar hit new highs, but then pulled on back aggressively with the Fed comments. They weren't any different type of comments, but they were. It was the catalyst, and it caused a lot of these stocks to fall, and a lot of them to create some massive reversals. Now, falling and creating massive reversals is nothing new. And in fact, if we go look at the S&P, we come here to August, we can see a pretty nasty reversal that happened off of a new high. Very similar to what we saw happen here on Wednesday. Now, what happened here in July and August? Well, the market The next day rebounded from that reversal, started going back higher. In fact, spent the next 3 days up higher before ultimately falling. And right now, we are in a very similar position where a lot of these companies that have hit new highs on revenues and earnings that are declining or flat, they saw some of these nasty reversals, and now they're seeing a little bit more strength. So if you're bearish, how do you play it? Well, if you're bearish, you have to be patient, unfortunately. You can take some stabs, but you ultimately have to be patient. And what are you looking for? Well, after this reversal and now a little consolidation, you're just looking for a close below the low from the prior day. So let's just say Caterpillar closes here today, and then tomorrow or Tuesday, it closes below today's low of 290.31. Well, that's the time to look to set up a trade. What if Caterpillar rallies up to 295? Okay, no big deal. You still wait for the same thing. Wait for it to close below the low from the prior day. When it does that, that's your cue to say, hey, the odds are much more in my favor. Let's go. Let me go after this, this stock. Okay. From a bullish standpoint, what do you do on something like this? Well, you can be a buyer, right? You can be a buyer, Caterpillar. You want to chase in. You want to ride the trend. You just have to use the opposite approach. Instead of being a put buyer or a downside player, if the low from the prior day gets broken, you buy it and use that as your stop. And if the low from the prior day gets broken, you just say, okay, I'm out. You need to move on. And it's a very simple way to run some of these stocks that are just blitzing on higher. And when we look at things like Boeing and Caterpillar and Honeywell and a lot of these industrials, we're seeing something very, very similar there. All right. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you later. Take care.